the overall general market for the gold price, as far as supply, demand, and fundamentals, as far as US dollar printing, etc., all points to a tremendous opportunity in gold in the future.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on our coverage of the gold and silver markets and recording on a Friday today. And it's nice to see that gold and silver actually up a bit. And to discuss the latest market developments with silver up about 40 cents, let's take a look at gold. I'll pull that up in a second. And joining me today is Blair of Great Thunder Gold. And yeah, gold up $10. So Blair, nice to have you on in here in a day when the metals prices are up. Seems to be happening a lot more often than the past couple of years, perhaps not surprisingly given what's going on in the world. And with that said, pleasure to welcome you on in here today. How are you doing?
Great, thank you. Thank you for having me.
Well, I appreciate that. And maybe to start, you know, we're sitting here today, gold 1886-ish at the moment. Been quite a year or so. I'd love to get your thoughts on what you're seeing in the gold market, what you're expecting, and where you see things right now.
Okay. Well, I mean, it's always interesting being a gold speculator, and I know, last Friday at this time, and even on Sunday, I'm looking at Twitter polls, and gold's at $1,960, and do you think gold's going to go to 2,000 this week? And 85% said yes. So of course, Monday morning I wake up, pull up Kitco, rub my eyes 10 times, look again, gold's down 100. So. Luckily for me, I was one of the people that said no, just a guess though. Anyhow, the overall general market for the gold price, as far as supply, demand, and fundamentals, as far as US dollar printing, etc., all points to a tremendous opportunity in gold in the future. It's never going to happen as quick as everybody wants, etc., but it'll creep up and we'll be off to the races.
That sure makes a lot of sense to me. And you touched on something there that I think is worth exploring a bit further, where you said it doesn't go as quickly as people often want. I know, there's go back decades into the 80s, back into the 70s, where people thought gold and silver were going to skyrocket. And certainly when you measure gold from $35 in following Bretton Woods to, I believe it's up now 55 times, which beats even the stock markets, yet it's a market that doesn't move linearly, and perhaps patience is pretty darn important in this thing.
Yeah, I mean, just like the Dow or anything else, I mean, it's going to have its peaks and valleys, and in the end, being a long-term shareholder is always, the best way to make money's real money. You can trade in and out of things, but I mean, I think you'll end up even by the end of it. I've certainly done my fair share of trading in the last 30 years, and for every 3 wins, there's 1 loss to offset it. And I always found the best money is finding good assets and projects and sticking with them.
Yeah, and it was interesting. I was listening to one of your other interviews, and I mentioned during that 30 years of experience, you had an interesting coworker that I'll bet a few people are familiar with, which of course is Eric Sprott, who certainly has taken a long-term approach and made quite a name for himself in this industry. Could you tell folks more about that, what it was like working with him, anything you might have learned and are applying now?
Well, I mean, it was a tremendous experience in my life. I was young at the time. I got started in the stock market when I was 18. I went over to Sprott probably at the age of 24. A small little company, maybe about 25 people, give or take at the time. And I was lucky enough to get to sit next to Eric. And, his approach is far different than most people. He's a very methodical person. He's an economist, chartered accountant, and he's the first one up in the morning, digesting every newspaper in the history of in the whole world, well informed, sees things in the future, and places large bets on those things and rides them out. So it was a wonderful experience. I spent about four and a half years there. And strangely enough, at that time, Eric was not a mining person.
Yeah.
We were mostly into, what was then, the very first investors in Cryptologic, which was, the first online casino, into a whole bunch of oil servicing stocks and, earning stocks and the small caps. And I remember there was a big sign in the office when you walked in and said, bonds are for losers. So anyhow, it was a great entrepreneurial sort of place, small cap stuff when everybody else was doing the banks and all that. And Eric was right on target and almost never wrong. So it was wonderful.
Yeah, I could imagine. And perhaps the reason why he expresses that patience that we talked about earlier, where he's been in this for a while. And certainly the people I interview, when they form their opinion and a price goes down, but you have the conviction of your opinion and are able to buy more, can help out a lot. And, obviously getting to that degree of confidence, maybe there is in the challenge, although perhaps because there's a lot of people who just follow the companies that Eric invests in, and that has become its own strategy, certainly, and you have the ability to add to this from your own experience. But what would you or Eric or both of you, when you're looking at these mining companies, what are some of the things that you look for or red flags that you avoid?
Well, I think management is key and share structure are two important things. You want to make sure that the management and the people involved in the company are, you're not, making it a lifestyle company. They're not paying themselves, lots of money and going on lots of trips and expense accounts. You want to look at the share structure. I mean, we're very cognizant of companies that give away warrants and lots of options. Those are the things that can hold share prices back from proper valuations. So I think those are, and obviously the projects are the number one most important things. But I mean, lots of great people or bad people have screwed up good projects, and but yeah, project number one with management, and of course share structure.
Yeah, that does make a lot of sense. And along with that, and going back to what we were talking about earlier with where the whole gold market stands. All right, gold around 1900. Some people thought it was going up. It came down yet. From a longer term perspective, can someone even construct a case of why gold should go down a year from now, 2 years from now? I mean, Blair, let's say we're in the next election in 2024. Is it possible that gold is $1,500 4 years from now?
Well, I mean, there's a couple of things. I mean, anybody who doesn't think that we're coming into a good gold market, I mean, they must be buying Bitcoin or something, which could be a great investment. I don't really understand it. I guess you are mining some imaginary coins. As far as the world's currency goes, for a long time now, gold has been a safe haven and place to go in times of uncertainty, which of course we are in the middle of plenty of uncertainty. And as you know, it is pegged to the US dollar. And anybody that has a basic knowledge of the stock market even would know Great Thunder Gold with 30 million shares out at 70 cents is worth 21 million. If we issued another 30 million shares and we had nothing else fundamentally that changed in the company, we would not be sitting at 70 cents. Obviously, we would be dropping because we've diluted ourselves. So, as the U.S. economy is, on its knees with this coronavirus, and they are printing stimulus checks and money and diluting their currency and devaluing it, and they don't have a whole bunch of new earnings coming in to offset that. They actually have the opposite effect. that should take the gold price to much higher numbers just based on the devaluation of the US dollar.
Yeah, you sure would think so. And I love that example because most companies, when they dilute, share price goes down, yet we see the Fed dilute at a historic rate and somehow people flock to dollars. Is that just the way markets work, that these things build even if to some people it seems completely insane, but the crowd goes until it just can't go anymore, and maybe that's what we should expect and position our trades around that? Or what would you say about that?
Well, I don't know. I mean, markets really have parabolic moves when the herd all tries to run through the one little gate, so you got all these sheep running around, and as soon as the run is to gold, which we had a little bit of a surge over the summer, into the junior mining stocks. That is abated now. I mean, a lot of those cheaper private placements have come free trading, and we've kind of leveled off, and the gold price has leveled off. But you could see what could happen when the herd just gets a little sniff that it's going to be gold, and gold fever is actually a thing. These stock prices surge, and interest in the area surges. Just supply and demand. I think when the gold price starts to go up a little bit further here, and these private placements are digested and we're into exploration season, I think the appetite increases and all boats float. And I think that's it's not far away from now. I think when this election thing's over and the stimulus checks are printed, I guess they won't have Trump's name on them this time. I think we're back in action in our junior markets. I mean, as great as our junior markets are here in Canada, we have 30 million people. And south of the border and in Europe, I think Europe's a little bit ahead in it. I don't think the general American public is onto the gold trade yet. And when that starts to happen and gold fever happens and everybody tries to squish in, we don't have billion share floats. We have smaller floats, and when the money flows in from U.S. money managers and American retail, et cetera, that's we catch a bid and off we go, and we get financed and we drill and hopefully have some big discoveries.
Yeah, Blair, that makes a lot of sense. I appreciate you mentioning that, because essentially that idea that there's going to be some point where everyone on Wall Street agrees, oh, maybe we should do what Warren Buffett just did, or what all these gold and silver guys have been talking about. It feels that sometimes like we're close to that, and then maybe the price goes down a little bit and things settle. I'm curious what you're hearing from the investors you talk to. I think there's some more that are getting on board, probably a lot that are still wondering, is this going to be like 2016 where we get our hopes up and then get our dreams crushed again?
Yeah.
What are you hearing out there?
I think, well, I mean, it is a frustrating thing to be a small cap, commodities-based investor, as it is probably being a Bitcoin buyer and seller. I mean, everything's Bitcoin's going to break. I remember when it was 10,000 to 15 to 20, it was all of a sudden it was going to 100, and every analyst said it's going to 100,000, and it fell to 6 or 7 or whatever. Now it's going back up again. Everybody's getting all excited. The fundamentals are there for gold and silver. Gold just based on the U.S. dollar, and silver as something that trades at a percentage of the gold price, and silver also. With solar uses, et cetera, which, that alternative energies are actually going to be more in vogue with Biden and his plans. So, I think we're on the precipice, I guess, of I think, a raging gold bull market, which generally these last 6 to 8 years, you don't even know you're in them for the first 3 years. And I think we're probably in year 3, 4. If you mentioned a mining stock 2 years ago, people would swear at you. I mean, and then, the year 2, they're like, all right, maybe I'll take a dabble. Year 3, get a little bit of a surge, pull back. But I mean, we have these trends generally last 6 to 8 years in history. They have 6 to 8 years, and they bust and they come back, and that's the way it goes. And I think we are in the early innings of that.
Yeah, and although I guess one trend that lasts from eternity is that governments spend, central banks print, and we've seen history show how that normally ends up. And Blair, something I think would be helpful for folks, because we have a lot of companies on, and certainly I know there are people out there that aren't always being genuine and with what they're doing. So I think it's understandable and probably good for people to have skepticism. Although what I find is usually the case, and something refreshing to me in gold and silver, yeah, we're talking, you and I both think gold and silver are going to go up and it's going to be good times, but it's not usually that people just, out of left field decided to think this. I mean, usually that's, I think, the case. It was, you were seeing what was happening and led to what you're doing with Great Thunder Gold, not the other way around. So perhaps you could talk about what drove you to start the project and get involved, and how that came about.
Sure. I mean, basically, I am, for lack of a better word, a venture capitalist in the market. So, I mean, I get involved in stories sort of early. I help form them. I help restructure things. I finance them. I help assemble boards of directors, et cetera, and put things together. Great Thunder Gold was a struggling company in the lithium space, with the CEO that was looking to retire. So myself and a couple partners bought the company, and did a consolidation and bought the debt, etc. And just cleaned up the balance sheet and went looking for a project. At that time, I ran into Mr. Sprott down in Miami, and he was telling me about this great stock called Wallbridge Mining, which at the time was trading around 16 to 18 cents. There wasn't really a great gold market. And he was just telling me it was very interesting, and he thought it was, potential to have tens of millions of ounces of gold. And knowing him and knowing that he's rarely wrong, I came back and decided that the company should be looking for something in that area before the word gets out. So the company was able to locate some vendors that had properties directly attached to the Wallbridge property to the north, and assemble a land package there from 2 or 3 different vendors, and then to the south as well. So the company assembled a great land package before Wallbridge took off. Of course, Wallbridge went up from 16, 18 cents at that time. And just to let you know, like, Wallbridge does have, it's not a small cap by any means. It has, I'm going to look right now, 800 million shares outstanding, and it went from 16.5 cents up to $1.35 in a matter of a year. They were getting some massive discoveries, a new way of thinking geologically in the area. This was an older deposit that they started to drill deeper and at different azimuths, and coming up with large strike lengths of gold and very high grade. So it's been exciting to be next door and watch it all unfold. Well, we put together our data that we did some airborne geophysics, and we are set to drill sometime in the next couple months. We just got our forestry permits, which allow us to move the drill in. We're just finishing up the drill contractors, and it's time for us to get to work. So it's an exciting time.
Yeah, I think that is certainly the case. And I always like thinking about what it's like when companies like yours, you're going out and finally doing the drilling, and then you find out how all of your years of preparation and research play out. Along those lines, something that I'd like to get your opinion on with, you mentioned why Sprott would be involved, where this came from. Perhaps you could just talk about the share structure. Obviously, that's something that investors care about, knowing that your incentives are aligned with what they are investing in. And if you could touch on that for a moment.
For sure. So, I mean, we were very cognizant of share structure. Once we got these projects near Great Thunder Gold, or sorry, near Walbridge Mining, we did a 25-cent financing, of which Eric bought in and took, I think he was up to about 18-19% at that point in time. We did not issue any warrants on that financing at all. And then we did another financing recently at 65 cents with a half warrant at 85 for only 4.5 million shares. And we did a $1 flow through financing. We got about $1.4 million of flow through at $1. So no warrant on that. So we're very cognizant of not issuing a lot of warrants. We had no stock options outstanding until a couple of weeks ago when I set for the board, not that many options. I believe there was around 2 million options at 75 cents, so above our last financing price. Myself, I own about 18% of the company. Eric somewhere in that area as well. We have 3 or 4 other shareholders in the 7 to 9% range that are long-term believers. So we have a fairly tight float, and people that we are, I guess we say, structured for success because we have long-term shareholders that are believers and a tight float. We can afford to have a couple misses here and there and ride it out. We have 3.5 million total dollars in the bank, 2 million hard and $1.5 million flow through. So we're well financed, and we're also I'm always looking for and talking to people to add more properties to the portfolio that make sense. We're always looking to get into areas before other people at a discounted rate before the herd arrives.
Well, Blair, it sounds like you've done pretty well in setting up the company, putting it in the position to be able to succeed. Perhaps before you wrap up, you could just let folks know the best way to get more information, how they can find you on the web, and anything else in particular you just would like to pass along that they should know about. Okay.
Well, you could always get us at info@greatthundergold.com. The website is www.greatthundergold.com. Phone numbers on the website if anybody wants to call the company and talk further about the opportunity.
Well, Blair, I appreciate that. And folks, all that information is in the description field below. So just scroll down a little bit and then you can click to get more information, get added to their email list, and stay posted on what Blair and Great Thunder Gold are going to be doing. And with that said, Blair, again, I appreciate you joining me today. It's great to meet you and talk gold. It, maybe it requires some patience, but if you can find that, I think it's really an exciting time for people who own the metals, for people who are getting involved in the stocks, and certainly pleasure to catch up with you. And I'll look forward to following your success going forward.
Okay, great. Thank you very much, Chris.